GM guys, so today I'm going to be showing you the trade I took with the bootcamp guys. This is our $1 million model reversal scenario, but it came in a form of New York a continuation type of a scenario. If you are looking at what London did earlier on the day, so we're going to start by looking at the 15-minute chart. My top left is 15 minutes. Gold obviously is the asset that we are looking at, and top bottom left is 5 minutes, and then on my right here we have the 1 minute chart. So let's zoom in on the 15 minutes. So in 15 minutes we saw the market, we saw price take out relatively equal highs here during London. And then silver bullet, there was a silver bullet entry right there. Nice CB, it's a venom. And then it dropped low, it went all the way down. Now it almost took out this low, but it failed to do so. Now this was pre-market, New York session pre-market. Now, if you look at this movement to the downside, we have a breakaway gap here, and then we have this bearish candle in the form of a bearish order block, and we have this discount fair value gap down here, which price initially respected. If you look at these candles here, and we eventually broke and closed below it, so it became an inversion. Look at this candle pushing it all the way down, and then a retracement during the pre-market. I was watching to see if price is going to respect this BC, or rather inversion fair value gap. This is a BC, it's a bullish fair value gap. It was supposed to offer support, and it did so, but it failed. It was short-lived, and after failing, then we expect it to now act as resistance. So here it failed to do that, but now here's the interesting part. So you need to understand what a dealing range is. If you study this, because now here pre-market we left relatively equal lows, and up here we have a swing high, and here we don't have a clear swing high, a swing low, we just have relatively equal lows. This becomes your draw on liquidity, and if this becomes your draw on liquidity, what you want to do is you want to measure the dealing range. So this becomes your dealing range high, and you take the lowest low here, and this is your okay, let's take this. Let's take this, guys. It's 2 a.m. I'm actually it's almost 20 to 2. I'm actually kind of sleepy, but I said I'm gonna record this before I go to bed, so I'm just gonna be very quick. Okay, now this is the dealing range I was focusing on during pre-market, and I wanted to see after 7 o'clock we sweep some form of relatively equal highs within the premium of this range, and that's exactly what happened. So what do we have here? We have that bearish order block at premium. Look at that, board is respecting that fair value gap, the opening price. The board is definitely, they never closed above the opening price there, which showed it showed me that it's actually respecting it. But initially I was looking at just above this equilibrium range. I was looking at this imbalance as the first sign, first premium PDRA that I was interested in. This candle's high, and it did get a reaction here. It dropped, but for a short while I got trailed out, and then price came all the way up again. Actually, it was somewhere here. Yes, I got in here before it could reach the imbalance here. I saw signs of at the right time, because I was trading the macro, since we do not have news. We didn't have news, red falling news event. We didn't have any news today, so I was looking at the macro 850 to 910, and as you can see the time here, I caught a move to the downside here and didn't take out these lows, pushed further up to the premium, deep premium of this dealing range high. So what is a dealing range? It's a high A swing high, I mean, sorry, what is a swing high? Swing high is the highest high. It's a high with the higher lower high on the left and a lower high on the right. So that's a swing high. So that's how you get your highest high in the dealing range. Same thing here. This is a swing low. This low is higher than this low, and also this low is higher than this low. So this becomes a swing low. That's how you measure. That's how you get your dealing range. It has to have some form of buy side liquidity and some form of sell side liquidity. So everybody is trapped here. You need to understand the premium and discount of the range with the bias in mind. It makes everything easy. So that's exactly what happened here. Now let's go to 5 minutes and look at what's happening right here, because I like reclaimed fair value gaps. Now inside this, this is the same dealing range that we are talking about, guys. It's the same dealing range that we are talking about. Inside that same dealing range, let me just show you. This is the dealing range that I was pointing out on 15 minutes. And look at this imbalance here. Look at how many times it was respected. Here, the bodies here closed a little bit above it, but it pushed price lower. So we reclaimed that inversion fair value gap. So we failed to break and close above it a couple of times here. And again, here it gave us a turning point at just as soon after 9:30. So we should have swing higher, taking out these relatively equal highs here. These smooth highs are very much visible on the 1 minute. And then we closed bearish below this inversion right there. And we also left an imbalance, which was a nice silver bullet entry because this was after 10 o'clock. So ICT silver bullet closed bearish market structure shift here, immediate rebalance, and price went all the way down to these relatively equal lows. Now on 1 minute, this is what we had. Okay, so when the first entry was when we failed to reach this, let's go to 15 minutes again here. When we failed to reach this fair value gap right there, let's demonstrate. When we failed to reach this CB here, right here, it was 850, so I went short here. Now guys, you need to check the video on my YouTube. Everything is there. I'm not gonna try maybe and show you guys the video, but you're gonna see the execution. I went short when this candle struck these highs at 850, 849, and then it closed bearish here. And I was looking at these lows for a partial entry, but I only took one position out here, and then this thing trailed me out at a loss. But it was minimal because of the partial that I had taken here. I had taken out. So after that, I waited. I was still confident that price is gonna still come clean these lows out. Now, this is the same reclaimed. Let me just say reclaimed CB on from 5 minutes, right? This is the reclaimed CB from 5 minutes. This. Now let's go back so you can see it. This is the CB here. So I was studying this range, swing high, swing low, studying the premium of this because I was still bearish for the day, and I had a clean draw on liquidity. So these relatively equal lows, I wanted to see price clear them out. So this is what happened. This was some form of a market maker sell model. After getting trailed out here, I waited again and created some smooth edges here. I wanted to see price take out those after 9:30, and that's exactly what happened. 9:30 here, we opened to sub this out. This was our first presented fair value gap, pushed higher. Now looking at the bodies, they respected that reclaimed CB, finally broke lower, changing state of delivery right there, went all the way up again just to, there's an imbalance, a volume imbalance here, and it's also this outer block, actually the main threshold, actually try to actually close above the main threshold if I'm just eyeballing it now, and then dropped lower, and then after closing bearish below the first presented fair value gap, and also making a bearish market structure shift right there. I became confident in this setup, and I went short right there on a retest. Actually, I think I went short once we closed bearish here, but I canceled my trades again after closing above the first presented fair value gap. I didn't like that, and then after closing bearish again here below that candle's opening price, I went short again. I added more when this candle closed here, and then I left them to run, and this the rest was history. So my positions and executions, I'm gonna go now and show you on the chart. I delivered a nice 5.6R beautiful trade, and I took majority up before we could even take out these lows. I think I took somewhere here because I spent a lot of time here jiggling, and I was like, nah, let me not be greedy, let me just take this home. So now I'm gonna show you guys the let me just go to my YouTube and also my Instagram so you can see my execution. So it's here on my, this is the execution video, it's on my story. Let's watch it. It's here on my, and guys, please follow me on all socials. So this is the execution video of the first trade that I took, and this is how it went. And you're gonna see me get trailed out on this one because I was offside, not offside, but, and I was live obviously with the boot camp, so I was telling them to make sure that they pay attention to certain stuff there. And look at the balance here is 902 US dollars, floating 900. And I was highlighting those relatively weaker lows, telling them I'm interested in those relatively weaker lows. And I took something off this, take partials, and let's see. I just stop loss, trail stop loss a little bit. Don't be too greedy. And it took me out right there. So came back, it came back, and uh, and then it trailed me out. Now that was the balance, second entry after closing below the first presented fair value gap before it closed again above it. You're gonna see me kill these trades after a deep retracement, which I did not like. Okay, so here the 5-minute fair value gap was forming. This is a retracement that made me kill my trades. I was highlighting the first presented fair value gap here. So this is my second trade for the day, and normally I take 2 trades and be done, but today I took 3. Now the third trade comes at a condition, with a condition. So it has to be like the trade idea that is still valid, and I was not offside. It's a continuation. I just maybe I got trailed out because of maybe improper stop loss, or it's just a trade that I started doubting, and then I get an more, more confident. So you see me killing those trades before I could take a full loss, and I went back in after that rejection again. So I started recording my screen again when I came back. So now the balance is 746, and now floating nicely at so I was also constantly checking Bitcoin, looking for entries on BTC as well, because I had Bitcoin in my other screen. So I was checking if there is momentum to the downside. It looked beautiful and I wanted to take it down. So stop loss adjusted, everything adjusted to just let it play now. I just did my take profits. The trade was nice. It planned out and played out exactly how I wanted to see it. Floating nicely again, 300 and something dollars. Constantly checking Bitcoin. And guys, please, the execution video is also on my YouTube. Leave some comments there, leave some comments. Okay, I'm trading my $1 million model, and this model is going to take me to 1 million. It's going to be me my first ever million US dollars in a few months from now. And don't say I didn't tell you. So I'm telling them to put stop loss at break even now. And I'm also doing the same thing. I have a partial waiting. And that's now floating nicely 400. And then it dropped nicely, beautifully to the downside. Started taking some partials. This is part of trade management, very proper trade management. You need to pay the trader as the price goes, because a draw is not a target. It's not a draw is a draw. It's not a target. So it might not be reached sometimes, but it can inspire price to make a certain movement at a specific time. And boom, that's how I did this beautiful trade, if you ask me. And see you guys on the next one. I'm taking this account to 5,000 in a few days, and I want you guys to be part of this. Till I see you on the next one, guys. Cheers.